makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, French President Emmanuel Macron will appoint a new prime minister within days after Francois Bayrou lost a confidence vote in the lower house of parliament. Now, whoever is picked will have to navigate a way to pass a budget in a very splintered National Assembly, a reality that Bayrou reminded legislators about.
Parce que, mesdames et messieurs les députés,
ladies and gentlemen of the Assembly, you have the power to overturn the government, but you do not have the power to erase reality. The expenses will continue to increase even more, and the enormity of the debt, which is already unbearable, will get heavier and heavier and more expensive.
Now, for more, we're joined by Bloomberg's Caroit outside the National Assembly in Paris. Caroline, who can actually Macron choose from now?
Well, clearly, what he hasn't tried yet is a left-wing socialist prime minister. And in fact, last week, when he had lunch with Francois Bayrou, in the middle of all these meetings with the various parties, he actually asked his own camp to try and work out with the socialists to create some kind of alternative budget. So perhaps he's going to go this route this time. At least that's what the first secretary of the Socialist Party, Olivier Faure, was calling for last night. Or perhaps a more consensual technocratic who's compatible with the socialists, such as Pierre Moscovici, for example, the head of the State Court of Audit, or Éric Lombard, the current finance minister. Some say he might also go still the centrist route with someone like the defense minister, Sébastien Lecornu. But of course, this is a very dangerous route to go because he's already tried this, and this might actually anger the socialists, but this also might anger the streets. You know, France is facing 2 days of national rallies tomorrow and next week, and clearly if the social anger is mounting and we have a new sort of yellow vest movement starting, then this will have a bigger impact longer term on the economy. I was talking to a French economist this morning from Allianz. She was telling me that the yellow vest, for example, cost 0.2 points to the French GDP. So, of course, even if in the short term, Bayrou's fall was mostly priced in, investors are looking for stability. The business community is also looking for stability. The Medef vice president just an hour ago was saying on Bloomberg TV, we need stability in order to keep investing, keep hiring. So a sort of coalition government with the socialist moderate left might be the way to go, even though it's not exactly in the spirit of French politics.
Caroline, thank you so much. I like that. In the spirit of French politics, I mean, many things have been in the past in the spirit of French politics. Caroline Conan there with the very latest impasse in French politics. And then Anglo-American has also confirmed a Bloomberg scoop that it's to acquire the Canadian firm Teck Resources. News of one of the biggest mining deals in a decade saw Teck's shares in the U.S. soar in extended trading. Well, let's get the details with Martin Ritchie from our metals and mining team. So, first of all, why does Anglo want Teck, and what do we know about the deal?
Yeah, I'll talk you through the details of this deal. First of all, it's a merger of equals, so-called, so it's a no-premium deal. The combined company likely to be worth more than $50 billion based on the recent valuations of both companies. Anglo shareholders will hold 62.4%, Teck holding the remainder. They're promising $800 million in cost synergies, a further $1.4 billion possible operational synergies through combining some of the operations in Chile, for example. This company will be 70% copper focused is the figure they've given out, and that's a good way of leading into the sort of why are they doing this deal. As you know, mining companies the world over have been trying to get more exposure to copper. One of the big deals last year that fell through was BHP trying to buy Anglo. In fact, Anglo since then has simplified its business, offloaded a lot of other assets such as diamonds, metallurgical coal, and nickel, to focus more on copper itself, and it's taking over Teck, which again has sold off some of its non-copper assets to create this company. It says will be among the top 5 copper producers worldwide.
Martin, thanks so much. Martin Ritchie there with the very latest on this mining sector M&A. Now, Banca Monte dei Paschi has secured a majority stake in Mediobanca, cementing a once unthinkable 16 billion euro takeover that's set to reshape Italian finance. According to a filing, Mediobanca investors have tendered more than 62% of the shares for Monte Paschi's unsolicited bid. Now, the deal is set to create Italy's third largest lender by assets. And you can see Monte Paschi gaining some 5%, Mediobanca gaining also 5%. Well, joining us is Kallum Pickering, chief economist at Peel Hunt. Kallum, I'm not going to ask you about M&A, although it does seem like it's right in the middle of it. Thank you also for braving the strikes. And I know, people get on bikes and buses and all sorts to get to the studio. The Fed is left, right and center after that pretty ugly jobs report on Friday. Does it change everything? Are you expecting 25 or 50 basis point cuts in September?
I'm expecting 25. I think what we've got with the jobs report is an answer to the question which the Fed has been sort of posing to itself, but markets have been posing to through summer, which is, will the anti-growth, potentially inflationary tariff and economic policies of the Trump administration cause the Fed to stray further away from its employment mandate or its inflation mandate? In the end, that was going to dictate the pace of any future policy changes. That was a pretty weak jobs report. We'd had those past revisions. Actually, US data just looks a little bit soft, certainly versus where we have been. And so the risks now seem to be to the downside on the labour market, much more than to the upside on inflation. That opens the door for the Fed to go. I don't think the Fed can really justify going 50 basis points yet, because there is still some inflation risk.
So, Kallum, first of all, is there a realistic outcome from the CPI on Thursday where actually the Fed could be forestalled in cutting rates next week?
I think it's unlikely, just because expectations for US inflation have come down significantly on the back of the economic weakness that we've seen.
So there's nothing really to derail a cut at this point?
You would need a very, very big surprise. I think it would be hard for even if we were surprised a little bit to the upside by the Fed, by inflation data, that probably dictates the pace of cuts, whether you go over successive meetings or whether you cut and skip and cut and skip. But I think at this point, markets would be very disappointed, and justifiably so, if the Fed didn't start to move rates lower. And here's where things get a little bit technical. It really is a macro market at the moment. You have two types of neutral interest rates. There's the neutral interest rate in the long run, which stabilizes the economy when basically nothing weird is happening. And then you have the interest rate which stabilizes the economy in the short run when you're faced with shocks. The US is now processing several structural and supply side shocks. And we're clearly seeing this downside risk to the US labor market. And the fear will be that the softness in cyclical momentum in the US starts to produce some very serious labour market weakness, and then the Fed will realise it's behind the curve. And I would just notice that all of the speculation that the administration is putting pressure on the Fed, and that may be the reason that the Fed needs to go, that's completely out of the window now. Now it's just a macro story, so the Fed is wide open.
But so why not go for 50?
Well, notice last year, actually, if we were sat here a year ago, the Fed did go 50. The Fed saw weakness in the labour market. This kind of SARM rule was activated, and the Fed says, OK, we need to start getting ahead of this. But when you're facing normal inflationary pressures and normal inflation risks, weakness in the labour market should produce disinflation through wage and price setting. When you're still worried about inflation risks, that's not an obvious call to make. And so I think the Fed needs to get on the other side of any inflation risk before it starts to go a little faster. But again, if we're at the start of some real weakness in the US economy, I think the market is right to start asking whether 50 is the right move. And the Fed typically reacts more aggressively to downside risks to its inflation employment mandate than it does upside risks to its inflation mandate.
Kallum, there's a lot, of course, we've been talking a lot about central bank independence and Fed independence. We now understand there's a great report by BGov Finance saying that, Hassett, Warsh and Waller are probably the Fed chair finalists. But there's also a lot of, concern about Lisa Cook and whether this is lawful, the removal, even if she's done something wrong. Why is that not playing out more in the markets?
Well, I'm not sure if it is to a certain extent, but at the long end of the bond market. Right, this is where we start to bake in these worries about structural pressures. I hate to bring Brexit into this conversation, but just let me for a moment because it provides a nice template. what we learned with Brexit was we worried much too much about the near-term economic consequences, did not factor in the long-term economic and credibility consequences of Brexit. That's, I think, is now playing out in the US, where all the panic in April about a US recession and lots of US inflation has given way to real question marks over the structural integrity of US institutions. I think timing will probably be on Donald Trump's side and the administration side, which is just to say that by the time you will be ready to change Powell, I don't think inflationary risks are going to be a big story in the US economy. It's going to be an economy that's growing below its long-run potential rate, let's call it mid-1.5s, with very little inflation worry. And so even if you put a very dovish Fed chair in there that wants to satisfy the administration's desires for lower rates, that's probably going to be the right economic policy decision anyway.
When you look at some of the political instability here in Europe, we're just talking about France. We have other countries that face similar fiscal pressures with the inability to actually put a budget together. Where does this go?
I realize my cup says help. It's like I'm sending subliminal messages to the audience. I'm really not. This is just a button on the terminal pad. The central problem across the advanced world, and this week we care about France, 2 weeks ago we cared about the UK, in 2 weeks it might be the US, is no one across the political spectrum is seriously contending with the 3 and 4 order magnitude increase in long-term public debt as a result of an aging population. And this is now happening as the bond market and as pension funds have basically swallowed all the long-term debt that they need. And so now we don't like the price that we're paying for the debt. What governments need to do is forget about 3 and 5 year budgets. Actually, we don't really care in markets whether the government hits a 20 or 30 billion target, as we're kind of fretting over in the UK. What we need are structural changes at the long end of the issuance to bring pensions under control, welfare under control. That will force the market, that will encourage the market to calm down. What I would like to see is one country just say, actually, we're just going to realize that it makes sense here. We're paying such a penalty because these high interest rates are crowding out business investment. They create uncertainty. They're hurting consumer confidence, entrepreneurship. If we were to get our long-term budget on track, that would probably be stimulative. So long-term austerity generates short-term economic stimulus, but politicians tend to learn the hard way. Eventually, the bond market's going to put a country against the wall and force them to do it. I suspect it won't be France because euro is a hard currency. That's an insurance policy. I think the UK is probably the highest risk country. But I think the big surprise will be it goes wrong, but then the economic outlook will actually turn positive fairly quickly. I
mean, there's the budget November 26. How do you, I mean, again, what do you think should be in it? Also, you have help, I have government. So
yeah, there we go.
Government, there you go.
You've got a mini help cup as well over there. My guess is that Keir Starmer, with the changes to his immediate economic team, with the shift to the cabinet, is recognising that the centre of gravity on politics in the UK is actually shifting to the right and economic policy issues. He needs to start moving away from wealth taxes, fears, taxes on housing, taxes on business and entrepreneurship. I mean, the governments like to fly kites in the UK. This is the adage. They're really dropping anchors and sinking ships. I think he'll probably put to bed all of that speculation. He's probably going to pick a fight with the anti-cuts fringe of his party to try and pass another welfare bill. Wouldn't be surprised if the Conservatives try and help him do that. And then with the Fed cutting, we're probably going to see actually that the bond market helps him out heading into the budget. And I don't think the budget will be all that scary. Come back in 6 months, we might be revisiting these problems, but I don't think we'll get any nasty tax increases. I think we'll probably squeeze through.
We have some breaking news from the BOJ. BOJ is said to see a chance of a hike this year despite politics. I mean, the parallels actually between some of the countries like France and BOJ, it goes back to fiscal.
It goes back to fiscal. We are facing now a classic case of crowding out, where the private sector has the sufficient balance sheet strength to start to take on risk, to build up credit balances and invest, and there's plenty of technology to invest in, and governments are impeding this process by not setting their own fiscal policies on track. Japan is further along the demographic story. It tells us where everyone else is heading. But again, I'm willing to go out on a limb here to say the first country that basically pursues long-term austerity. That's to take off big chunks of debt from the long-term outlook. The bond market will be so pleased with that. They'll bring down interest rates and you'll start to see the private economy will do better. And we'll avoid this 6-month cycle of foreboding over budgets and politics. We just need to get away from this. Again, the bond market will force us to do it unless we do it ourselves.
I mean, it's a bold call, as always. I'd expect nothing less. Kallum, thank you so much. Kallum Pickering there, chief economist at Peel Hunt. Now, coming up, U.S. House Democrats release an alleged birthday note from Donald Trump to Jeffrey Epstein. More on that next, and this is Bloomberg. And you can watch the full interview with the Finnish president on Friday, this Friday at 5:30 p.m. in the UK or 7 p.m. Eastern in the US. You can also watch it on the Bloomberg website and on the terminal from 9 a.m. on London time on Friday. It's the first of 6 episodes of the first season of Leaders with Me, Francine Lacqua, where I sit down with decision makers shaping our future to explore the personal stories behind their public personas. Now, Norway's Prime Minister Jonas Gahr Støre has declared victory in a close election where his Labour Party played to voters' fear of uncertainty regarding taxation and welfare policies. Støre is headed for another 4 years in office after Labour emerged as the Nordic country's biggest party, while the opposition bloc saw a shift to the right. And turning to the U.S., and House Democrats have released an alleged birthday note from Donald Trump to Jeffrey Epstein, intensifying scrutiny of the president's past interactions with the late disgraced financier. Now, the release stems from a trove of documents received by the House Oversight Committee, including a birthday book compiled for Epstein's 50th birthday. The White House says the note is fabricated. For more, let's bring in Bloomberg's Jill Deeses. Jill, what was in the image that the Democratic committee members released, and how has Trump actually responded?
Well, Francine, you just saw a copy of this image put up on your screen just now. So this comes from the Democratic members of the House Oversight Committee. This is the committee that is investigating more into Jeffrey Epstein's sex trafficking operation. So this is what they're saying is this alleged birthday note from Donald Trump to Jeffrey Epstein. Remember, Donald Trump, while he knew Epstein many, many years ago, he said since he had a falling out with him, and it was long since stopped being friends with him before a lot of the allegations came to light. So this is, kind of harkens back to what we actually saw earlier this summer when the Wall Street Journal reported on the existence of a birthday note written by Donald Trump. They said written by Donald Trump to Jeffrey Epstein. In that book, Donald Trump, of course, actually sued the Wall Street Journal over that reporting, including its parent company News Corp and owner Rupert Murdoch. And so we're seeing something very similar along these lines now in this type of denial coming from Trump and the Trump administration now. So Trump has said that this is fabricated, or his assistant chief of staff has said that this is fabricated. They're saying that the signature that you see present on that image was forged, and again, it's ultimately actually pursued legal action when the existence of a birthday letter was reported earlier this year. So you're really seeing that very strong pushback from Trump and the Trump administration. Of course, at this point, many of the documents that the House Oversight Committee is investigating have not been made public. They have said that they would make that public at a later date. So it does seem like there is plenty more to come on this particular story, including, potentially more, including this purported letter that have still yet to be made fully public.
Jill, thank you so much. Jill Deeses there with the very latest on these allegations. Now, Rupert Murdoch's family has settled its trust dispute, cementing Lachlan Murdoch's control over Fox and News Corp. Now, the deal ends a years-long legal battle and gives Lachlan sole authority. For more, let's bring in Bloomberg's Rosalind Matheson. Ros, so good morning. Thank you so much for joining us. Does this put the succession drama for Rupert Murdoch to bed once and for all?
Well, yes, as you say, this has been a real-life drama, but also a fictionalised, televised drama, and it's been going on for some years through the courts. And it does, to an extent, put this now to bed, because the issue was over the voting rights that some of Rupert Murdoch's children had and the ability to potentially form a bloc to move against Lachlan Murdoch if they wanted to. And they wanted to remove that ability so that Lachlan Murdoch can have a free rein to control the company, drive the company forward without that in the back of mind. And so finally they've come to an agreement whereby they will no longer be part of the trust that has control of Fox and News Corp. Out of that, they get $1 billion plus each and some change. for exiting, and that gives him a path forward. So for the company, at least, a sense that these succession dramas will recede from the company. Do they recede from the family? Well, maybe that's another question entirely, but at least for Rupert Murdoch, who's built these companies himself, the sense that there's clarity going forward with his son Lachlan, and also, above all, also the sense that, he won't steer these companies away from Rupert Murdoch's fundamental beliefs, which are quite conservative.
So with this newfound control, what kind of moves could we expect from him?
We can see that Lachlan is trying to steer the company very much through, difficult times for many media companies. Things are changing pretty quickly. So with Fox moving towards streaming as well, paid streaming, free streaming services being launched there, with the newspapers moving towards digital advertising and subscribers, particularly getting people to pay for the content. And they've got quite a good real estate business with listings and moving to monetize that even further, because it's a very sprawling conglomerate. So basically making all of that into the digital space where money seems to be these days. But it is very big, and so there are aspects of it that are quite unwieldy. So do they need to rationalise some of that as time goes on?
Ross, thanks so much. Ross Matheson there with the very latest on the Murdoch family. Coming up, we'll be speaking to an MP from Emmanuel Macron's Renaissance Party. We'll also be speaking to Ms. Rahman from Eurasia about France's economic uncertainty. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The French president will appoint a new prime minister in days, the country's fifth in less than 2 years after Francois Bayrou is voted out. Anglo-American is said to merge with Canada's Teck resources, marking one of the biggest mining deals in more than a decade. Plus, global stocks climb for a fifth day after optimism around U.S. interest rate cuts actually fuels a tech buying spree. Gold hits another record. So let's return to one of our top stories. And the French president, Emmanuel Macron, is to appoint a new prime minister within days after the current premier was defeated in a confidence vote in parliament. Earlier, France's 10-year benchmark bond roll pushed the yields above Italy's. The vice president of employees organization Medef, Fabrice Sache, spoke to Bloomberg a little earlier on business confidence.
The businesses, they want stability, of course. And unfortunately, the political situation makes it very difficult for France to have stability because Parliament is dispatched in few political forces that have not a lot in common. And to support a long-term pro-business policy, we need to have a stable majority, which was the case in the Fifth Republic for a long time.
For more, Bloomberg's Kallum is outside the French National Assembly with a guest. Hi, Kallum.
And I'm joined by one of the most prominent figures of the Renaissance Party at the National Assembly, Eleonore Caroit, one of the Renaissance MPs here. What are Macron's options now? What can he do? What should he do?
Well, he has constitutionally two options. He can either appoint a new prime minister who will then form a new government, or he could call for snap elections again. But I don't think that would be a good idea because I don't think this would lead to a result any different from what we saw just a year ago.
Who can that be? I mean, obviously, he's tried the right wing, he's tried the center. Do you think that President Macron now has to listen to Parliament and has to choose a socialist prime minister?
I think the answer is precisely in the question, because it is not because you appoint a prime minister whose past life was in the right or in the center or even in the left that you're going to solve a very difficult equation that has a solution, right? It is that you have a very fragmented National Assembly with groups that do not have the majority and that are only now starting to understand this very obvious situation. Remember just a year ago when the NFP, the left coalition, very eclectic coalition, arrived first, they said we won. They hadn't. It wasn't the case.
The situation is different now because they kind of broken with the far left of Jean-Luc Mélenchon. So would this be more acceptable to a centrist government, to the moderate right-wing Republicans? Is it time now to try the socialist route?
Exactly, but let's keep to the math. Because they've broken with the LFI, the Insoumis, they're now a little group that needs to be part of a wider coalition, which needs to include the center and also the moderate right. So however you look at it, you need to find a compromise. And finding a compromise means, of course, you could appoint someone from the left, from the right, someone who's also a technical prime minister, you name it. But whoever that is, this person will need to speak to everyone and find ways to, have different groups accept to put aside some of their priorities so that they can have other priorities put in place. And for us, this is nothing new, because this is exactly what we've done since day one. We did it with Michel Barnier, who came from the right. We did it with Francois Bayrou, who came from the Modem. And we're happy to do it with anyone who's willing to be constructive.
So your camp is willing to compromise. What kind of compromise are we looking at? Obviously, Francois Bayrou proposed more than 40 billion euros of savings in his budget. That didn't go well. Now, the socialists proposed only about 20 billion, half of that. Do you think that having just 20 billion euros of savings in this next budget, even if that means delaying possibly the deficit target by a few years, is that a good compromise? Is that acceptable for the center?
There's several ways of negotiating, and right now when you look at what people are saying, what different parties are putting, they're all saying, this is my red flag, I'm not going to go there. I don't think you land anywhere if you start that way, so I'm not going to tell you this is an absolutely no-go. Now, my view is that in France we pay too many taxes and we're not enough workers to actually cover the needs of a state that is very present and that has really good public services. So my view is, of course, that we need to cut more public expenditures, but if it takes, moving from 43.8 billion, which was what was proposed by Michel Bayrou, to another figure, of course we're willing to do so. What we need to see
20 billion is a figure that would potentially be acceptable for your party?
I'm not going to give you my bet now or what I would prefer, but what I'm going to tell you is that our attitude has always been and will continue to be a very constructive one, and this is precisely why yesterday we voted for the confidence vote. It's not, we didn't vote for or against Francois Bayrou. It was not about him. It wasn't even about his government or about his proposal. It was about finding stability, because I think this is the most important thing we need in France. We need predictability, stability, and, to be able to reassure the world that we'll be there and that we'll act responsibly.
You're saying that some other parties had some red flags all over. But obviously the socialists have proposed in their alternative budget a Zuckman tax on the wealthy, a 2% tax on those with more than 100 million euros. They've also proposed to go back to a retirement reform, age of 62 years old, or at least pause the current reform. Are these your red flags?
As I said, no red flags. But look at our demography. I mean, we're living older and older and we have fewer young people. In no country in the world, no developed country, you have this idea that you could work just until you're 60 years old and then, live 20 years being paid by the state, because this is the way it works for the pensions in France. It's not what you've saved, but is what the collectivity will pay you. So I don't think this is a good idea. But if it needs to talk about different career path, putting senior people to work in a different manner, why not? Everything is open. On the other hand, I think we can talk about taxing more rich people, but I don't think it's a good idea either. I think we're already taxing way too much. And on the other hand, I don't think you can think of how to save a system, a structural, situation with only one tax that would apply to a very limited number of people.
Do you think President Macron can actually avoid new snap elections? Is that kind of like the only way out? Because whoever is named next, it seems like those kinds of compromise are going to be hard to reach. Do you think if by the end of the year there's still a deadlock, we have no way out than new snap elections?
I wouldn't be against snap elections if I thought that they would lead to a different result, to a very strong majority. And I don't see this happening, not even for the National Rally, which to me would be the most dreadful situation, because when you look at their project, when you look at the budget that they propose, more than 100 billion spendings in addition to what we're doing, I think that would be a total disaster for a country. But even that is kind of unlikely. So I don't think proposing something that will not lead to a good result is the solution. The solution is really finding this way to compromise. And I know today here at the National Assembly, this might seem a bit unlikely, but there has been some progress since what happened a year ago. And I want to see the glass half full and see that we're actually learning as we walk and learning how to be a more democratic and parliamentarian republic.
The glass half full and the need to compromise. That was Eleonore Caroit, a Renaissance MP, live from the National Assembly, giving us a bit of the options that Macron has at the moment. Francine?
Caroline, thank you so much. Caroline Conan, they're interesting to hear the MP saying, look, something has changed. If you're in the markets, you kind of look at the political paralysis and you say, maybe France is a new Italy. Now, for more on France's ongoing political turmoil, I'm delighted to be joined by Mij Rahman, Eurasia Group's Managing Director for Europe. Mij, thank you for joining us. I absolutely, read your notes on a daily basis because every time it's like spot on, they're clear. What happens now in France? Because Emmanuel Macron doesn't have many options. He doesn't have many good options for himself, apart from, I guess, finding a replacement for Francois Bayrou.
Yeah, so I think we can say he's not going to call an early election. Right. That seems to be clear. It would return a divided assembly. The far right will probably come first. It would invite massive pressure on Macron to resign the presidency, which he doesn't want. So his only choice is to appoint a prime minister and then get a deal with the 66 moderate socialist swing bloc in the assembly to try and get a budget through for 2026. The far right, I think, has come to the calculation that constitutional crisis, an early election, is actually to Le Pen's advantage because it will expedite her repeal, potentially clearing the way for her to run in 2027. The hard left is ideologically and substantively opposed to everything Macron and his allies stand for. And so there is no one else to do a deal with other than the socialists. And that's who I think Macron, when appointing the prime minister, will be thinking about to try and get France's fiscal trajectory back on track.
Do you have a couple of names in mind? And again, it's not an easy task, right? What if he fails the first time around? I mean, we can't go through prime ministers every 5 months.
Correct, but I think there is something of a stability premium now. Now that the opposition has provoked the downfall of Bayrou, or Bayrou provoked his own downfall, I think now, certainly for the socialists, they will be minded to be a bit more constructive because they do want to distance themselves from La France Insoumise, the hard left. They do want to demonstrate their capacity to govern, but the new prime minister is going to obviously have to deliver fiscal concessions that speak to the socialist base. I mean, I think 3 names are doing the running, maybe 4, I think. Sébastien Lecornu, strong Macron ally, defence minister. That would be my pick for whom Macron will likely alight on as prime minister. Eric Lombard, I think, is a potential option, current finance minister. But there are also people like Gérald Darmanin who are in the running. Catherine Varot, current employment minister, her name has been surfacing a lot more frequently in the circles in the know, if there are circles in the know, in Paris. So I think probably one of those 4. I don't think he's going to tack too far to the left because that will then estrange partners within his own minority coalition. I think he's going to choose an ally, someone he can trust to try and then get the budget through.
Do you think there's anything that Emmanuel Macron could do now to save his legacy?
I mean, I think Macron's legacy question is really interesting, Francine. I mean, my view, I think he wants to come back in 2032. So after 2027. So what does that mean? I think he's trying to avoid a couple of situations. Number one, I don't think he wants a strong centrist candidate to emerge to replace him because a strong boss in the centre will make it harder for Macron to return in 2032. So Edouard Philippe, Gabriel Attal, some of these characters, I don't think that's where Macron wants France to go. I think he also wants to avoid gifting either the premiership or the presidency to the far right, because obviously that would be in direct opposition to everything he has stood for over the course of his time in power. So I think, Les Républicains, Bruno Retailleau, a character like that, I think is somebody that potentially Macron could see as a quote-unquote heir to him to enable him to potentially run again in 2032. But I accept the premise of your question, which is both in terms of economic performance, in terms of public finances, in terms of performance of the far right. Macron is arguably leaving the country in a far inferior situation than the one he inherited in 2017.
Is there anything that he can do now, from now until 2027, to be, to put France actually on a better footing economically? or does France not want to be reformed, full stop?
I think it's really hard. I mean, I think the only thing that clears the blockage is a presidential election. In every election, Francine, since 1958, so the inception of the Fifth Republic, a presidential election has been followed by a parliamentary election that has delivered the president a majority. Yeah. Macron was denied that outcome in 2022, and obviously with the decision last year around dissolution is now in the equilibrium that we see, which is effectively an assembly divided into three major blocks. I can't see that equilibrium changing between now and 2027, and so, you know, I think there will be incremental fiscal consolidation, incremental reform, but it's basically about keeping the show on the road. And the big game, presidential elections in 2027, and whether after those elections a parliament is returned that gives the new president a majority and the capacity to actually do the things that need to happen in terms of reform, fiscal consolidation, and so on and so forth.
I also want to ask you about the UK, because there's been big changes actually, and effectively the Prime Minister has taken more control of the economy with the appointment of Darren Jones at number 10. Where does that leave the Chancellor, and where does that leave the budget November 26th?
So I think Starmer's in real trouble. I think there's no way, you know, Labour is underperforming. You see it reflected in the opinion polls, inflation, the economy. I think the budget will obviously look to respect the manifesto red lines. It will respect the fiscal framework. So the game is about increasing taxes and which taxes will be increased to rebuild this cushion against the fiscal rule. I think next May is the moment of maximum danger for Starmer and Rachel Reeves. There are regional elections, Scotland and Wales, to both of their respective assemblies. Assuming the opinion polls are right and there are Labour reversals in both of those contexts, I think Starmer is in absolute trouble. That could be existential. And of course, if we are in a situation next year where we are again talking about the performance of inflation, of quarterly growth figures and of the fiscal framework, then I absolutely think Rachel Reeves is in play as well. Part of what Starmer did earlier in the week was put in place a team that could potentially succeed to HM Treasury in the event that Reeves has moved on, and Darren Jones, I think, is probably in prime position to do that unless Reeves and the economy start performing more strongly.
But it seems that a lot of the policies that Labour is chasing is trying to get votes that would maybe naturally today go to reform. Does that make him even more unpopular come next year?
I mean, it certainly makes him a lot less popular with his own MPs and with the left flank of the Labour Party, and you'll see that manifest and reflected in the race to succeed Angela Rayner. It also, of course, creates a problem on Starmer's left flank, both with respect to the Greens and the Lib Dems. And so that, I think, is the debate and the discussion that is now being had within the higher echelons of the Labour Party. What should their political strategy be as they look to confront 2029? Not only taking on Farage and moving to the right on immigration, but how they cover off their left flank as well.
I mean, does Keir Starmer seemingly gets along actually with Donald Trump? Does that help at all?
I mean, he's been good on foreign policy, Francine, and I think that's partly because of the operation in Downing Street. You have people from the Blair era and Jonathan Powell and others who are really strong on the foreign policy side, and he's had wins with Trump. Coalition of the Willing discussions, the strength on Ukraine. Obviously, the deal on Liberation Day tariffs was better for the UK than the deal the European Union struck, but you're not really seeing that reflected in domestic opinion polls. I mean, ultimately, Starmer, like Merz, indeed Macron, their ability to return to power depends on performance on two issues, cost of living and immigration. And unless those two issues are addressed to the satisfaction of the majority of voters in the UK, regardless of what Starmer does abroad, he won't win the next election.
Amish, when you look at the next 12 months, and I know you write prolifically great notes on research in Europe, what's the biggest question mark you have on? Is it Ukraine and the relationship on the support from the US, or is it most domestic issues that could spell real trouble for these economies?
I mean, I think it depends on the country we're looking at. I think in Europe there is a really consequential election in Hungary next year, where Orban is on the cusp of losing power. That's, of course, highly consequential not only for the outlook for Hungary politically and economically, but for broadly Europe speaking, given Orban's ideological opposition to a lot of what the European Union does at the aggregate level. So I think that election is important. We've talked about the UK. In France, there'll be local elections in the first quarter of next year, and then the game for the presidency will begin in earnest. I think that's important. I do think there's a very important and challenging fiscal debate in Germany, Francine, not in the context of this year's budget for next year, but the budget for 2027, where there's a fiscal gap of around 34 billion. The gap that brought down Scholz's administration was a fraction of that number, and so we do think there's a roughly 30% probability of the German government collapsing in the third quarter of next year, when you have a combination of bad results in regional elections and that very difficult discussion on fiscal policy.
That's so interesting, Mij. Thank you so much for coming on. As always, Mij Rahman, they're Managing Director for Europe at Eurasia Group. Now, coming up, as private credit players navigate U.S. tariffs and a prolonged deal drought, we'll speak to Symon Drake-Brockman from Pemberton Asset Management. That's next, and this is Bloomberg. Well, turning to private credit, unexpected rate cuts from the Fed have given lenders hope that deal-making could pick up again after a long dearth of activity. Joining us now is Symon Drake-Brockman, co-founder and managing partner at Pemberton Asset Management, a private credit firm with $27 billion of assets under management. Symon, thank you so much for joining us. First of all, do you have any concerns about mounting distress in private credit, full stop?
I think you've got to look at Europe in quite a different way to the United States. You know, if you look at US rates at the moment, they're 225, 250 basis points higher than Europe. And so, the ECB rate cuts and all of the actions, the stimulus programs that are starting to come through in Europe on the back of, defense spending, etc., has really, I think, set a fairly positive scene in credit inside of Europe today. I think, the concerns in the United States continue to be, how far and when the Fed will cut, because, that extra 250 basis points is expensive for borrowers in the United States. And so therefore, what we're seeing is a lot of interest coming out of US investors and global investors to come to Europe, because they kind of feel that Europe has finally kind of awoken again and has moved from austerity into growth on the back of the Trump defense policy, etc. So at the moment, credit is doing well in Europe, and I think the demand for financing in Europe is going to continue to grow dramatically over the next few years.
Have you changed, for example, your approach to funding software companies given the threat of AI?
I think it's a lot of the stuff, if you look at the type of outsourced business services we do, is supporting what would have been historic data centers. You can now put it on the cloud. You can bring specialized companies in to look at firewalls and other treatments which we use, rather than having to build expensive teams internally, etc. So AI will have quite a big impact, for example, on data mining. So we're using it actively and looking at all of the information that we're given about companies, particularly in underwriting new companies, so that we can absorb and compare them within their peer group very, very quickly in that space. So I think it won't necessarily undermine some of the key service parts. It's going to change how people are able to analyze and respond much more quickly on the back of the, if I say, 1,000-page documents that we get on, corporate data when we're looking at these new transactions.
But Symon, I guess the biggest concern in private equity is that, first of all, private credit is that private credit somehow masks some of the concerns, right, in the space, or that companies aren't valued correctly. How do you work around that?
Yeah, and I think once again I go back to two parts. I spent 7 years running businesses in the United States for two major banks. The industry in the United States is, nearly 3 decades old. Yeah. If you look at corporate lending in the United States, 75% of it is done by private firms like ourselves in the US market. If you look at the European market today, only 12% of what's done inside of Europe is coming from organizations like ourselves. So I think the real concern that you see a lot of people talking about is, are there too many people chasing too few opportunities? And the way I characterize that to people is, potentially in the United States, there are, because there's hundreds of managers competing, particularly in the mid-market space. If you come back to Europe today, some of the key metrics that show that I think supply and demand balance is still in a positive, place for investors is, margins in Europe are higher, loan documentation is much stronger with more controls around it, upfront fees are larger, which private equity is paying that extra premium to borrow the money and providing much more protection in the documentation, because there is a limited supply of capital and there's a huge demand for financing whilst the European banking industry continues to go through a very long-term structural change. So I think the concerns are different. I think answering your question about, mark-to-markets and, is there real visibility around this? I think the regulators, if you look at, for example, the Luxembourg, the CSSF, have put a huge amount of emphasis on managers like ourselves around using independent organizations to come in and value our assets to provide it, and that's to make sure that the insurance investors and the pension investors that we are managing money for actually have the real facts.
Symon, talk to me a little bit about this new NAV financing fund. So are they loans that basically provide smart liquidity tools for private equity, or do you worry that they're hidden leverage?
No, I think, it's, in my mind, it's really self-policing. So NAV lending to private equity firms has been going on for decades. So the very large investment banks were providing the leading private equity firms with financing on the concept of building a partnership so that they could do more M&A and more underwriting. I think what's happened now is, as the industries continue to grow, the mid-sized private equity firms are looking at how they can use this as well, and that financing is coming from organizations like us rather than the big banks, because there isn't so much M&A wallets for us, for them to get off those clients. And I think the LPs are being very, very focused on policing around it. So if they're really borrowing money to add value to the portfolio to make additional add-ons, and I think the real, if I can say, bridge around this is private equity has an investment period, say 4 years. I think they've realized with COVID and the other events, the period that they need to develop these companies is longer. And so once the investment period has closed, if they need additional capital, they're really using these things to develop those companies in a thoughtful way.
Symon, thank you so much for joining us. Don't be a stranger. You'll have to come back. Symon Drake-Brockman, they're a co-founder and managing partner at Pemberton Asset Management. Up next, it's Bloomberg Brief, and this is Bloomberg.